Hey Josh.
Hello? Hey Bryce, how
Hey,
you doing?
how are you? Good, how are you?
Not bad, not bad.
Great.
Everything good on your side?
Yeah, everything is good except the market. I don't exactly know what happened today, but
I'm not
yeah.
I'm not too worried
Mhm.
about that. I do my
Yeah.
I do my long term. So you do your investments and you don't worry too much about the market. And look at how my
Yeah,
company
yeah.
is doing, so I'm
Hmm.
doing great.
Yeah, because yeah, it was a big dip, right? And that's great. When you get those dips, I just bought more.
That's
Or yeah.
exactly. When the market goes down, then
Mhm.
you have that mindset of looking at it with a double-edged sword where, hey, it's down, I can buy some more. That's not a
Mhm.
problem. Hey, when it's up, if you want to sell, you sell. So make the market work both ways to your advantage.
Yeah, exactly. When you have a great opportunity to buy some stocks on discount, it's great.
Exactly. It's true. I mean, if
Yeah.
they're selling a Mercedes brand new at 20% off, hey, you can't complain. It's a good deal.
Yeah. All right, 6:31. So I guess we're gonna start. So today we have a meeting. So we have Josh here, and we're gonna talk about like uh, kind of like what's happening right now with the hyperinflation. And we know that like the government is printing a lot of money. It's also like questions that people ask, right? So if the government is printing that much money, what's the value of the money after that, right? And basically how to overcome that money printing. So yeah, Josh, I know that like you're really good with that, and like it's really like you basically know what's going on. So
Mhm.
that's why I'll just like let you talk from now. And yeah.
For sure. Thank you. So let's talk about, we have this inflation here, which seems to have no end to it. And to break down inflation, essentially, it's run by how well the economy is going, what's happening within the economy will affect the inflation rates. And so with COVID being here, there's not much movement on the economy, whereas people have lost jobs, businesses had to shut down, and in order to preserve your economy, the government will start to print money in this way, whereas governments usually have reserves of money for certain events, but something like this, they didn't forecast that, so they have to be printing this additional money. And so, as they're printing this money, then the value of your currency will be lessened. And you could think of it as you invested in a stock. And right now, the stock has, or this company of the stock has, let's say, 1 million outstanding shares that are available on the market. And so, let's say someone comes along and buys 500,000 of those stocks. Now, there's 500,000 stocks remaining. So that means the quantity is smaller, which means it's becoming more rare, and that will bring the value up of the stock. And prime examples when you've seen GameStop and those recent ones, a lot of people buying the stocks, that makes it go up because there's less of the stock on the market. So when the government starts putting more money on the market and no one's really buying, then there's so much money there that it starts to lose value because it's not really moving. So that's one of the main issues with the inflation. Now, I guess some of the questions could be as to where are they getting this money from? And I mean, that's a great question. And the government will print this money, and by doing so, they sort of create a system essentially where they buy back the money from themselves. And it's sort of like bonds, if you're familiar with a bond. And I actually wrote down a little description here to help you guys out. And so basically, a bond is when a company or government will sell you their debt with an interest rate. So you buy that debt and you get interest rate which is locked in for a certain time, or they call the maturity of the bond, and you hold on to these bonds for, let's say, a year maturity, and they pay you back plus the interest which they promise you. So what happens now is that the government is printing this money, and basically we're the ones buying the debt from them. And how they do it is look at it as the COVID relief. When you go and apply for the COVID relief, right? You need some money. They go, no problem. We're printing this money, so we might as well print it and give it to our citizens. So you as a citizen, you receive this $2,000 a month. And basically, that's like a bond from the government. You just bought a bond from the government, which in this case, they're not really going to pay you back. It's more or less you're going to pay them back by giving you the money, and then you have to use it to live, buy gas, groceries. So that means you're going to put the money back into their hands again, and then they give you that $2,000 for the next month, and you repeat that same thing over. So that's more or less how they're doing this money printing, and that's what's going. Whereas it's efficient to a certain extent because some people use the money for other stuff, and it doesn't really go back to the economy. But that's more or less where they're getting a lot of the money from. So in essence, once this COVID sort of gets behind us, they still have this big debt, all this money they've been printing, because during the inflation right now, governments also tend to, as they're printing it, some of it might be printed to this guy's pocket or these programs these government have, and that's where it really creates a big problem, where you really don't know where it's going. And so when they post these inflation rates, as I was looking at it the other day, I think they said it's around 1.6, 1.7, give or take. That's the inflation rate. And so to put it into easy terms, what you want to look at as you have $1 and you want to take 1.7% from that dollar, and that's what the actual dollar is worth. So let's just say $1 is really worth 98 cents right now. That's the true value of the dollar according to the inflation. So if the inflation rate goes higher, let's say it's at 2.5%, that means your dollar is really 97.5 cents. So how does this affect us as citizens and investors? Well, you want to look at it in this way, is that your dollar now does not have as much power to buy you certain things. And for companies and businesses, when they are buying products, supplies to bring to you, maybe that product was costing them as a bulk order $1 million, but now it costs them 1.2 million. So now they're going to make you guys pay for that. So then the price of things go up, but your salaries, your income doesn't go up. And that's where the problems start to happen, where the middle class starts dropping more because the inflation is going up and the price of their income is not being brought up to accommodate with it. And that's where this big misconception happens. So one of the best ways of avoiding the inflation trap is investing. And by you guys being here, that means that you want to listen, we're interested in learning to be financially literate and get past these. And so when you're investing now, you always want to consider fees, inflation rate, Those were the key things you want to remember. And a lot of investors sort of overlook those things where they just look at, I invested $50 and wow, let's say a week later, I have $60. But did you consider, were there any fees to purchase that? And then also, you're counting inflation, right? So inflation really kicks into, especially long term. If you're really doing like day trading and so forth, it won't affect you that much because you're flipping money too fast for it to really affect you. But when you look at long term, and usually mutual funds, ETFs, are all trying to match or beat the market. Maybe the market will be up by, let's say, 4% at the end of the year. And so when you look at it and you say, I had the mutual fund and it did 5.3%. So in your head, you're like, yeah, I beat the market. But then you have to go back and say, wait a second, what are the fees involved for that ETF or that mutual fund? So you take that into consideration. Then afterwards, you want to say, what was the inflation rate of the year or so forth? And then you take that into consideration. And that's going to give you the real number as to, did you really beat the market, or were you on par with the market? Or maybe you did not even beat the market because you're considering all these numbers. But when you look at numbers at face value, then you can definitely be skewed because you didn't include inflation and also the fees attached to your investment or so forth. I think we had a question there, Bryce. Could you, before I
Yeah,
move
so
on?
there is a question from MJ. The question is, if the USD devalues, so with the hyperinflation, how would that impact our US and Canadian stock investments?
Um, so you're asking if you did buy an American stock? Yes.
Yeah, so yeah, for what I understand, our MJ, actually, if you want to turn on your microphone, you're welcome to turn it on. Okay.
Hi, Bryce. It's Deborah. Yeah. So I was just wondering, if the US dollar devalues and we own stocks, like what will happen to our stocks, like the price of our stocks?
Yes, so that becomes a bit more trickier as well because you're looking at the value of the US dollar. So when you purchased it, you have to look at to say maybe our dollar was a bit stronger and it was 78 uh, cents per US dollar. Now, let's say the US dollar is weakened, so maybe our dollar may be stronger against US dollar, or maybe our dollar weakened as well. So then they both went down. So what you really have to do is, and this is where like accounting, bookkeeping comes into play, is when you look at when you bought the stock, and all platforms show you a history of what you've been buying. You look at it and you look at the date of the value of when sorry, let me word this right. You look at the value of the US dollar on that day when you purchased it, and then you look at it now, right? So then you can calculate that to say the dollar has gained from that point till now, maybe the US dollar has gained 10%. So you're like, okay, so you have 10% on you, but then the Canadian dollar, if it goes down, then that's advantage for you because then you'll get a bit more on that 10% gain of that US dollar. So that's sort of like how you look at it. Hope that was the easiest way. Did you understand that?
Yes, I understand that. I guess I was asking more the bigger picture. If the US dollar devalues, you have hyperinflation. I'm just wondering, like in a broad sense, what happens? Um, I know real estate goes up, but what happens to the stock market? Is that a like I have money in the stock market. I'm trying to think about getting into hard assets like real estate because I know in inflation that will be fine. But I'm just wondering in the stock market with inflation, does it hold its value? What happens in the stock market with hyperinflation?
Yeah, so usually on most cases, the stocks will hold their value, but with hyperinflation, it sort of starts leaning the market to crash because everything's going to need a correction, right? And you probably heard of it as there's a Warren Buffett indicator, and it's at a very high point right now, which is indicating the market needs a big correction. And that being with the hyperinflation happening, with a lot of this money being printed and going out, as you're seeing a prime example, a lot of these people are buying into stocks and buying into companies which really don't have any value, but they're buying to push the market in unprecedented ways. So yes, that's where the hyperinflation will sort of affect the market because it gives a lot more retailers a lot of this money which they didn't have prior, and they're not buying much, so they want to go put in the market. So that can skew market results. And in the event, you can crash the market through that hyper inflation. But as saying prior, if you are investing in a company, looking at a company on a value level, saying, let's take example, Coca-Cola, it has good value, what they're doing. You know, you see their sales, you see their management, and they have continued to grow their company and have continued to pay out dividends, and the team is run very well, then you know that you investing in that company, you're not really going to lose your money. Not going to, sort of just go out the door. It's a strong company, and you will gain money through the market point.
Okay. So you are saying then that in hyperinflation, it is safe to be in the stock market as long as you pick those companies that are offering good value and running their business efficiently, something like that.
Yes, absolutely. You definitely want to look at the balance sheets of companies, right? You don't really want to go just off the hype of whatever the market's doing, because that's where you'll lose money because you just want to join in and you don't really understand the company. Then that's usually when the shortcomings happen. If you do the research and you look at the actual company and how they're managing the situation now, and you look at their history, and you look really at the financial health of that company, then absolutely it's a better state to have your money on the market.
Okay.
Now, with that being said, you also have bank accounts now which are saying, open an account, we're going to give you, I usually seen like 2%. Sometimes I think I've seen like 2.5 or something along those lines. And so with accounts like that, in that manner, especially around like 2.3% or so forth, those are actually a good place to put your money if you're unsure as to where to invest it. Because investing just because of a hype or so forth, that's one of the worst moves you can do. A smart move is to sit your money in a high interest savings account, make a plan, a strategy, and then execute it into the market. So when a bank account says it has, let's say, 2% interest rate, and the current inflation rate is 1.7, then yes, leaving that money in there, you will make 0.3% interest on that bank account. So at least your money is maintaining its health and slightly gaining a little bit. So that's a nice reassurance knowing while I'm thinking about a plan, I'm looking and researching into companies, my money is holding its value and gaining a little bit. So when you're ready to act, you take the money out the account and it's still that $100 that maybe you put in 3 months ago, right? It might have a little bit more. Whereas if you have a bank account that, let's say, the interest rate is 1.5, you're actually losing money by keeping it in that bank account because the inflation is 1.6. So by keeping it in that account, let's say you put $100 in there, at the end of the year, it will say $100, but it's actually worth $99, let's say. Does that make sense for you?
Yes, Joshua, but the 1.7% inflation, I mean, I look at house prices, gas prices, food prices, and it's not 1.7. It is way more than that. So I don't mean to hog
Oh, no
the
worries.
I'm just wondering, like, is there anywhere else to put our money if we're afraid of inflation? Like, for example, gold or any
Yeah,
other sectors that are safe to put our money?
absolutely. Gold is definitely a good haven to place your money in there. Um, it's actually better off even if you can actually buy gold itself, the physical gold. That's one of the best ways to actually have gold. Through that venue, you actually have more power in that aspect. Um, Definitely going back to the inflation rate, and that's why I thought to myself, saying, I definitely thought it was much higher, but as I was researching and looking into it, they're saying it's 1.6, but with the government, not everything is straightforward, and we don't know the real number. But I definitely feel like the inflation rate right now is more closer to like 1.9%, honestly and truly. So that's my thoughts. Also, as you mentioned, there's gas, there's many other aspects of life, but they really always come down to the inflation plays a big part of all these swinging numbers, honestly and truly. So even though it's a little percent, it it does contribute a lot to how it affects the economy and prices within it.
Okay, thank you.
No problem. I think we had Mark want to say something. Go ahead.
Yeah, hi Josh. I just wanted a quick question. Is there a difference between, just to touch on it, difference between the cost of living adjustment versus inflation? Because or is the exact same thing?
In in theory, there should be. There should be. Whereas as the inflation goes up, your sort of paycheck should be matched. So usually, what happens is if companies were operating properly, is that every year you might see when you look at your paycheck. Let's say you're getting paid $20. Maybe when your anniversary comes around, you might see your pay rate go to $20.7 right? So that's sort of trying to hold $20 as a life rates go up, cost of living goes up. But due to the fact that that's not reality, and we see prices going up every day for just keep going up, keep going up. Same with housing. The housing prices keep going up, keep going up, keep going up, and the salaries aren't really going anywhere. That also creates a concern of you pretty much will crash your economy because no one can move forward, right? No one has the money to buy houses, and the housing market drives many economies, like the Western world. That's like the biggest thing right now is the housing economy. So if your housing economy crashes, then it crashes the economy in total because it's sort of like an engine where once the engine stops moving, you don't go anywhere. And
Yeah.
so that's why right now you're seeing a lot of the interest rate for houses are very low because they want people to buy to sort of stimulate the economy.
Definitely. And I see they're even getting strategic in the grocery business. They'll keep the product the same price so people won't notice, but they'll give you a smaller quantity. So
That's
that's
right.
it's like a
Yeah.
hidden tax kind of. Yes.
Yeah, that's exactly some of the few things. And that relates also back to the housing, whereas you look at a lot of these new condos and houses, they're smaller and the price is still, they brought the price down, but you look at the size and it's like, wow, they really reduced the sizing. So it's sort of little tactics as to, sort of nurse people into saying, hey, this is affordable. We won't give you much, but it's affordable. And so by doing that, they're trying to nudge the economy to move, and therefore as this opens up, the government would stop printing the money and basically go into a plan as to how to get the money back from us. So I guess the famous one was the GST tax. That was basically just paying off debt. That's all it was. So who knows? They might come up with some Trudeau tax, and will basically be us just paying off the national debt. But one or the other, they'll try exactly capital gains too. Exactly, and that's a big one, 50%. And so one way to also avoid capital gain taxes by holding your investments. I believe if it's over 5 years, then the capital gain tax on that is reduced by quite a bit. And so that's why it's good to have a long-term strategy, and it definitely helps you with saving on the taxes.
Thank you.
No problem. All right. Were there any other questions in there?
Yeah, I have a comment, and you're absolutely right about how they use us to get the money back. An example of that is like right now, what they're doing with people that are coming in from vacation or from travel, they're holding them in hotels and charging them up to $2,000 during the 2-week stay. And that seemed like it's a way to stimulate the hotels from them shutting down the hotels for what? For like a year or whatever. So you're absolutely right. That's a good point. Thank you.
No problem. Yes, that's like I said, the government is, and as they say, you have to be very careful about it. Anything related to the government, and one thing is when you go to the banks, and the first thing they always want to do is they want to sell you mutual funds. The reason for mutual funds is that you're buying government debt. So by the banks pushing you and you purchasing those debts, the government rewards the banks for that. So they get a good money from it, and then you're paying, you're basically paying the debt for them. So that's why I always use a word of caution whenever the banks are so try to push certain products on you. It's 90% of the time you're gonna be paying debt for the government, just in one way, shape, or form. And so that's why it's always best to continue to do your research and put your money into the stock market, whereas you're in full control and you're making the decisions, and that way you'll get the best maximum returns. And with the knowledge presented today, we always want to look at your numbers like an accountant, right? Accountants look for every little penny, right? And so that's why even though inflation may be 1.6, 1.7, it may not be a big number, but when you start making millions of dollars, 1.6 or 1.7 is quite a lot of money lost if you're not careful about it. So it's good to think from that standpoint from now. And as you guys progress and you guys are doing well, I'm definitely sure there'll be millionaires in this group. You want to consider those numbers.
There is a question from Deborah.
Go ahead.
Is silver also a good asset to hold in inflation environment?
I mean, silver does hold its own per se, but silver is not really in a high demand, right? So I would definitely lean more towards gold, have silver as well. But I would say gold, or even looking into if you want to look at some good commodities coming up, good sectors would be in like the battery sector, as we see a lot of EVs starting to pop up, Ford, Toyota. So they're definitely going to need batteries. So that demand is only going to increase as the years come. So that's a good sector to look into. And absolutely, yeah, copper would be great as well, because copper is needed. It's not needed for the batteries. Copper is needed for the motor, for electric motor. They wrap copper around it. So they're definitely going to need the copper to propel any of the EVs going forward. All right. Were there any other questions there, too? Or did we get all of them? And guys, feel free if you have any questions or so. Definitely, shoot them over. At times, maybe you just want to sit down and think about it, and we have a question, they definitely just drop in the group, and we'll be able to assist you there.
Yeah,
think
that's good. Yeah,
Kurt
thank you
has a
very much, Josh.
question, no problem.
Oh, there's a question. Yeah.
Yeah,
Sorry, go
yeah.
ahead, Kirk. Mhm.
I have another question. I kind of started the group a little late, but did you guys touch on the cryptocurrency at all
No,
before I got in? Okay, so
Ashley is the expert more on cryptocurrency, so she would definitely be able to address your questions in a better manner than I could.
okay,
Just,
because I see like especially for millennials, it seems like cryptocurrency or Bitcoin and all that seemed like it was invented to actually stimulate what's going on right now with inflation, because a lot of people are making like amazing money off of Bitcoin and cryptocurrency. So it's like, even though the house prices are going up, if you're a young person that's intuitive enough to get into the business or get into an investment game in cryptocurrency, you could actually buy a house in a couple of years or something like that.
Absolutely, yeah. The little bit which I know about cryptocurrency is that, especially with Bitcoin, is Bitcoin has a limited amount, whereas once it gets that number, no more is produced, and that's what
Right.
makes it really valuable. Whereas if, let's say, the government of Canada, let's
Hmm.
say, they would match their money printing to the reserves and maybe might go over by, you know, let's say 10%, then
Right.
our money will be very valuable because it's still being contained within a lot,
Right.
and it's limited circulation, so it hold it. But since the governments basically can print whatever they want,
Hmm.
that's what makes the money go up and down. Whereas with Bitcoin, once that Bitcoin is set, that's it, and that makes it like gold. There's a
Right.
certain quantity to it, and it will just retain its value.
Right. Right. Thank you.
mhm.
No
They,
problem.
they actually they actually call Bitcoin Gold 2.0, right? So especially for that reason, so a good way to hold value. It's my favorite way, but like uh, everyone is like open to do anything they want to do. I would like to also share here, there is a meeting on Wednesday. I'm actually going to share it. So Ashley is going to be there. So if you have any questions related to cryptocurrencies, you can ask Ashley directly and she should be able to answer them. And one other thing I would like to add before ending the meeting, we are starting a newsletter, right? So we're starting on Wednesday, actually, in 2 days. So basically, if you are interested in like seeing what Josh is investing in, and basically all of his strategies and all, it's the purpose of the newsletter. So you can just follow it, and you're gonna have like bi-weekly tips from everyone and basically all of our experts. So like Ashley is going to be there as well. And I know that Deborah asked which cryptocurrency to invest in. So this is basically what like Ashley is going to cover as well. So in the newsletter, just saying which cryptocurrency she's looking at, what is the opportunity, and why basically she's interested or actually like having some of that cryptocurrency. So I strongly encourage you to take a look at this newsletter. Otherwise, thanks a lot, Josh, for all of that. It was really super useful.
Yeah,
If
no
you guys have
problem.
any questions, yeah, please just like ask them in the group directly. You can also like send them on Meetup. And yeah, thanks again, Josh.
Thank you very much. It was a pleasure. Have yourself a great night, guys and gals. And be sure to shoot any questions in that group, and we'll gladly assist you.
All right. Thank you, Joe.
All right,
No problem. You're welcome.
bye.
Have a good night, guys and
Thank you
girls.
very much. Yeah.